You know how you mark up an order block, price comes back into it, and you're just staring at the candles like, okay, is this being respected or is it about to get completely dumped on? That's exactly the problem this indicator is designed to solve. The order block footprints algo alpha doesn't just draw boxes and hope price reacts. It first identifies which moves actually matter, and then, when price returns to those areas, it shows what's really trading inside the zone using footprint-style delta and absorption signals. So look at the chart. These colored boxes around the candles are the order blocks. Green boxes are bullish order blocks, and red boxes are bearish order blocks. But they're not drawn on every little swing. They only appear after a strong, abnormal directional push. Under the hood, the script tracks consecutive candle bodies and measures how extreme that run is using a z-score. Only when the impulse is statistically significant does it say, all right, that move mattered, and it marks the last opposite candle before that impulse as the order block. Once the zone is created, it extends forward in time, and price can trade inside it, react off it, or rotate around it. But there's a hard invalidation rule. For a bullish order block, a clean close below the zone invalidates it. For a bearish order block, a clean close above kills it. No redrawing and no hindsight adjustments. Now here's the part that makes this different. When price trades back into one of these zones, the candles inside the box light up with footprint-style rows and show delta at different price levels. Green shading for positive delta and red shading for negative delta. Instead of guessing whether the level is holding, you can actually see whether buyers or sellers are in control while price is inside the zone. You'll also sometimes see absorption labels appear near the wicks.
A practical way to trade it is straightforward. Let price tag the order block, wait for absorption near the important edge of the zone, then look for the first candle that starts closing back up with buyers showing in the footprint rows. Entries often come on that reclaim, stops can go below the rejecting wick or just outside the box, and targets are usually structure-based like prior swing highs or the origin of the impulse that broke structure earlier. Now flip it for a bearish case. You get a slow grind higher, then a sharp bearish dump. The script flags that impulse and marks the last bullish candle before it as a bearish order block. Price later rallies back into the red box, footprint rows turn on again, and near the top you might initially see green delta as late buyers chase the move. But if the zone is real, red delta starts stacking up right where the wicks poke into the top, and an absorption label appears on an upper rejection. That tells you buyers are aggressive, but they're getting absorbed by resting sell orders. Wait for rejection plus absorption near the top, then enter once price fails to hold and starts closing back down. A few settings actually matter here. Z-score window controls how selective the script is with impulses. Higher values mean fewer but stronger zones. Lower values give more zones but more noise. Max box age controls how long a zone stays valid, and rows per bar controls footprint detail. Lower is cleaner, higher is more granular but busier. There's also a prevent overlap option to keep zones from stacking. This is still a context tool, not a magic entry button. Use it to see which order blocks actually matter and what's really happening when price comes back home.